Hey folks, this is a strategy that I use to have a higher time frame confluence to trades that I take with the MBZ model that I use for reversals, continuations, and also with inversion for value gaps as well. What I like to do is start off with a time frame alignment. And so what I like to do based off that is combine two time frames together, one on a higher time frame for a point of interest and one on a lower time frame for the actual model entry. And so with the 5 minute, for example, I like to look at the 1 hour and sometimes the 4 hour. Both are really great time frames to look at. And so here we can just mark our key levels based off that, right? For a higher time frame point of interest, I simply like to look at highs or lows and or fair value gap. So here we can see we have a 4 hour gap nested inside right there. Definitely mark that out. And if we go to the 1 hour chart, you can also see we have a 1 hour gap right there. And so what I like to do is based off the current structure of whatever price might be doing, I like to see a continuation and or a reaction off that, because this is a key level, but I'm basically looking for a specific model reaction on the lower time frame. And in this case, it would be the 5 minute. So because we have a bullish 1 hour gap, we have resting highs up here. This seems like a pretty good target here, and or any other resting high above that is also a pretty good target. Or I also like to use higher time frame opposing gaps. So in this case, we have a bearish gap up here. I like to use that as targets as well. So if price were to start showing more bullish price action here, these resting highs up here are going to be great targets, but also this 1 hour bearish gap. I can split it up, use it as separate targets on the way up, right? And so now that we have our key point of interest, I'm simply going to go down to a lower time frame and just wait for a key reaction here, going into pretty much New York open or equities open here at 8:30. Here we can see we have the resting high, we have everything pretty much in place, and now I'm basically looking for a key reaction. And so right here, there's not much going on. There's a little bit of a consolidation. And what I tend to look for is, because I have the point of interest now, I'm looking for pretty much anything in regards to the model that I use, which is MBZ, right? I'm looking for types 1 through 4 of MBZ, and I'll walk through exactly what that is, or just an inversion. And then based off the reversal, I'm going to look for the continuation opportunity. So as I wait for price to push into that area, I can see that's already having a bullish reaction, right, off that 1 hour gap. And so here, this is a type 1 MBZ. Now, let me walk through what that is exactly. Basically, it takes out the swing low here, pivot low, and it has an up close candle. So what's so special about that? Well, because this candle swept a low, but it also closed bullish, and it is a low, so it's having a reversal sequence here. I'm looking at candle 1 or C1 here, right? And candle 1 is an opposing candle into that area, which is a liquidity level, which is the low. And because price pushed down into that, it swept a low, had a bullish reaction. This is going to be C2 right here. So we can see that C2 had a bullish reaction. Now, how can I tell precisely that it had a bullish reaction? Does it just have to be a bullish candle? Well, to make it more mechanical, it simply has to close above 50% of that bearish body. And we can see that it closed above it right here. I'm not looking at the wicks, I'm looking at the body. And so it closed above that. That's a confirmation. So the indicator automatically automates that along with the gap. And here we can see we had that beautiful reaction. Now let's say I missed that reaction, right? We still have all our higher time frame targets. We have the resting high, we have this high up here on the 5 minute, we have the 1 hour gap, etc., etc. So I can have multiple targets. So really there's no rush in regards to missing this entry. And what I could do is then wait for some type of inversion, some type of continuation, and that would look like a type 4 MBZ. So a type 4 MBZ is basically a bullish gap in this case, and I'm waiting for a reaction off of that. Or it can also look like this, right? We have an inversion for value gap, where we can see price stabbed into this bearish gap, closed above it, and it became an inversion. Now, what I like to do when that happens, I pretty much already have everything set. We have the key point of interest, reversal already occurring, we have our targets. I can use this as an entry. Sure, that's good enough, but sometimes I like to wait for confirmation on this. So I like to see, based off the confirmation bar of that inversion, I take the close of that, drag it down to the low, and that's basically what I'm watching. And so based off that, I like to see price form the same sequence that we talked about down there. And if that doesn't occur there, I can simply wait for it to occur at a later moment. So for example, let's see if it happens again. Here we have another inversion. We've already reached two of our targets, the resting high, the 1 hour gap. But as I mentioned, you can break down that 1 hour bearish gap into different targets. We have the lower end here, we have the midpoint, and the higher end there. All three are valid targets. We've already tapped the lower end, so perhaps I can use the midpoint and the higher end up here, right? And now, here, this is a perfect opportunity. We basically have everything occurring, continuation, and now we have another inversion. And so again, I like to look at the closure with the low. This becomes my hotspot zone on the 5 minute. And I'm looking for another MBZ reaction. So what does that imply? It means I'm looking for an opposing candle. Here it is. You see that bearish candle is a bullish zone based off the framework here. And I'm looking for a bullish reaction closing past 50% of that opposing body. So here you can see it closes past 50% of that. Boom. That's all I need. At that point, I can enter long there, put my stop at the low, pivot low, and target that higher time frame target, which is the midpoint up here, or perhaps 75% of the gap, and or the higher end, right? And so this swing low basically becomes not necessarily protected, but in a way it does, because I really don't want to see price take out the low, and I want to see it maintain it. The reason is because it's already inverted this bearish gap. It's already tested the zone here. It's already had a bullish reaction, and it really doesn't need to come all the way back down into that zone to test this pivot low. If it does, then that would simply mean that we're having a bearish reaction off the bearish gap, and we can actually look for a reversal sequence similar to what happened down here, but in this case, a bearish opportunity. And so that's pretty much the model framework. I do this every day, day in, day out, and combining everything, you can see how it just uses the 1 hour gap in this case, looking for a reversal sequence. Now, it's not always going to be just like this, for example. Sometimes you'll see the reversal sequence actually being an inversion, and it's going to start reversing from a key higher time frame point of interest by having an inversion. And so what that can look like is, for example, if we go to the 4 hour chart and just showing you an example of what it could look like, here you can see we have a 4 hour gap, 4 hour MBZ, off the 4 hour gap, same idea, same model, opposing candle, bearish reaction, closing past 50%, but this also has an inversion. And so marking that zone, if we go back in time, if you go to the 5 minute chart, based off that area, sometimes you'll get the reversal sequence being pretty much an inversion, right? It doesn't always have to be a liquidity MBZ or a type 4 MBZ. Sometimes it'll simply just be an inversion, right? Or it can even be a type 4 MBZ. And so what that would look like is pretty much this right here. As we see price pushing, this pretty much starts the reversal sequence based off the framework. The actual reversal obviously took place up here, but this starts the sequence on this specific time frame based off that 4 hour higher time frame point of interest. And so based off this right here, I'm looking for the same framework and I'm looking for the same continuations. So we have a bearish gap here. I can look for a continuation of that down to any resting low, etc., or an inversion like this, right? And so you can see how it's quite literally occurring again. Taps the type 4, Inversion, this becomes your bearish zone right here. Opposing candle, bearish MBZ off of that. You mark that area right there. You want to see price push away from this to go lower. And so what happens is price taps into that, and you can see how very quickly it just takes out the lows. This goes hand in hand. Inversions, fair value gaps, MBZs, liquidity MBZs, higher time frame fair value gaps. You can see how it repeats nonstop. And this pretty much makes any noise go away. So I hope this brought some insight into using inversion fair value gaps alongside MBZs.